Welcome to Target Market Insights, the multifamily and marketing podcast. Each week, John Kasman interviews multifamily and marketing experts to teach you how to find the best places to invest, attract investors, and grow your portfolio. You are listening to Target Market Insights with your host, John Kasman.
Welcome to Target Market Insights. I'm your host, John Kasman, and I want to thank you for joining us for another great episode. Now, do me a big favor, okay? If you love this show, if you're getting great value out of it, make sure you leave us a 5-star rating and review. And don't forget to hit the subscribe button so you don't miss an episode. Now, today we're going to be talking to Kristine Jefferson. Kristine Jefferson is an experienced full-time real estate investor and specializes in multifamily real estate acquisitions and syndication. Now, with over 10 years experience in real estate, she understands the value of investing in multifamily and the freedom and financial flexibility that investing provides for her clients. Now, she manages the capital raising arm with Mission Bay Capital Partners, and they currently have over 1,400 units in their portfolio. Let's welcome to the show, Kristine Jefferson.
Hey, John. Thanks for having me on. I appreciate it.
Absolutely. Thank you for coming on the show. It's so good to talk to you. I know that we initially connected last year and you all have done a lot of things since then. So for our listeners who are not as familiar with you, why don't you take 1 minute, describe yourself and give a little bit more context about Mission Bay?
Yes. Yeah. And it has been, we've done a lot in the past year since we've last communicated with each other. And so I'm Kristine Jefferson with Mission Bay Capital Partners, and we together, my partner Daniel and I, in the last year, 2019, we've acquired three new properties, and one we already had, but we refinanced it and had a large raise on that one. So it's almost like we did four for all intents and purposes, because that one was the largest raise of the year. So we acquired three last year, and we've kind of had our heads down and plugging away.
Yeah. So you, in your bio, we talked about having 10 years experience. So you've been doing this for a while. Were you doing the syndication for the last 10 years, or when did you really start working with investors in syndication?
I started in 2008 in single family, fix and flips. So I did that for several years, and primarily all of my fix and flips were doing it through private funds. So I did not bank loans, but private, just 100% private funds. So it wasn't I guess you can say it was a syndication, but not quite. So I did all of that through raising capital. And so I knew I had a little bit of a knack for that. But when I transitioned to apartment investing, it was a totally different ballgame as far as raising capital. I've been in multifamily since 2017. So I transitioned from single family to multifamily in 2017.
What sparked that transition for you?
So it was always in the back of my mind to do apartment investing, and I had a couple of books on a shelf. I'm like, oh, one day I'll get to it one day, but it seemed so big to me. But the last deal that I did as a flipper, as a single family investor, was a tear down and then build. So I demolished a house and I built a new house. And it was such a huge project, and it was so much money to do that. And it was well over $1 million. I'm like, why am I doing that on one door when I can be in multifamily and have several doors and spread the risk? And I'm like, now's the time. I need to transition from single family to multifamily. So that was kind of like my switch from doing that property. And I'm like, yeah, now's the time.
So going from that $1 million rebuilt single family house to multifamily, I guess the size and the confidence you had built doing the flips, you're probably like, I'm probably being pretty inefficient, right? By spending or investing $1 million doing this one project, when if I were to spread this out across multiple doors, there's probably more upside potential, less downside risk, and, greater opportunities to spread it out and scale.
Exactly. So after I did that last one, and it was almost close to $2 million. Oh,
wow.
And yeah, so that's how large it was. And I'm like, yeah, so I need to be a multifamily. And that's when I started reading my books and listening to podcasts and getting educated and just diving into it with both feet. I'm like, no turning back. It's multifamily all the way.
So for someone listening right now in a similar boat, maybe it's not a $2 million project, but they've been in single family, whether it's single family flips, single family rentals, and they're looking to make the leap to multifamily. What are some key lessons that you learned on your path that they should kind of take into consideration?
Yeah, sure. I didn't even know. I didn't know I didn't know anything about multifamily. And I think, my regret was not doing it earlier. But if I could go back, I wouldn't change anything because I'm like how everything worked out and I like where I am now. So I wouldn't want to change anything. But I really I didn't know anyone. There weren't meetups at the time. There were like one or two podcasts in 2017. It's not like it is now. But I did it and I immersed myself and I started going back up to meetups, even though there were residential meetups. And then I got a mentor, and I started going through an educational program. So, I mean, anybody can do it. Anybody who is a single family investor right now thinking of going multifamily, if I can do it, anybody can do it. I was a stay-at-home mom for 7 years, before I started doing, the residential fix and flips. So, I knew I wanted to be in business for myself. So anyone who has a determination can transition or you start in multifamily.
I love it.
As far as what to know, I guess it's just doing it. It's just taking action. It's just calling brokers or finding a market to focus on, developing broker relationships and learning how to underwrite deals. Just get started.
Yeah, I want to play back what I heard as far as some key insights there. So one, and I'm going to work a little bit backwards, but
Okay.
Educating yourself, right, is one of the first things, right? Jump into the education. You talked about podcasts and books and, going to meetings, going to events, but really surround yourself and immerse yourself in multifamily so you can gather as much knowledge as possible. But with that knowledge, make sure you take action. Get started, take action, start doing the small things, reaching out to brokers, analyzing deals, putting in offers. And you talked about mentorship, having a mentor in your corner, somebody who can overlook, your deals and give you kind of a blueprint is a really important element to kind of get started. Just recognize what you don't know. Because I think the one thing that holds most people back is they feel like they could figure it out, but who wants to go in and make a huge mistake on that first deal? So This is probably an opportunity where it makes sense to go ahead and bring on a mentor or someone who has that experience to help make sure you don't make certain mistakes and just learn from their experience as well. I love your story and the fact that you mentioned that you were a stay-at-home mom for 7 years before you got into flipping. Then you were a flipper for what probably was another 8 or 9 years, right? Before you got
so I'm 49. I'm almost 49.
Yeah. So you did that for another 9 years, right? Before you kind of transitioned to multifamily. And without trying to sound like an infomercial, obviously, you mentioned that if you could do it, anyone could do it.
Yeah.
And I want to, someone called me out recently this week. And they said, "Man, yeah, you just did an interview and it sounded like you guys just like selling a dream and it was easy." And I'm like, well, it's not. But I also realized that you have to, there's certain things you have to be successful, right? You have to have the drive. You have to be willing to put in the work. You have to be educated or surround yourself with the resources that can help you succeed. So I do want to make sure that people are clear that this is not a get rich quick thing. This is not the 3 a.m. infomercial where, you see, hey, I did it. I was living on the streets and, I signed up for this program and now I'm a multimillionaire. Like, that's not what we're talking about. But if you can take the steps and put in the work, you can definitely be successful. So I want to just give that a bit of a caveat. With that said, you obviously have had a lot of success. You talked about, the 4 deals you guys did last year. I want to talk about the we in that. Okay. So Mission A, you said you and your partner, Daniel. Can you give me some context to how you all came to partner and how do you run your partnership?
Yeah. So Daniel and I'll back up a little bit because I started just by myself again, which I did in the single family fix and flip business. That was all me. And I knew going into multifamily, I didn't want to do it by myself again. And I did underwrite and look at and submit LOIs for some smaller unit deals. My first one I submitted was an 18 unit deal in like Norfolk, Virginia. And I was thinking, I'm like, wow, if I need to syndicate, which was really too small of a deal to syndicate, if I'm bringing in investors and I'm doing this by myself and it's my first time, I'm just not feeling comfortable with that. So I knew that I wanted to partner up with someone. I didn't want to do it alone. I didn't want to raise money for a deal that I don't even have experience in doing, because it's pretty serious in having investor dollars. And then I don't, even though I did have a mentor at the time, I'm like, I won't always. And I wanted to do it with somebody who had experience. I met my partner at, it was random. It was at a single family meetup, and it was a holiday event. And we sat next to each other at a round table for the dinner. And we were the only two people in the entire meetup doing apartment investing. And at the time I had submitted LOIs, but I hadn't gotten anywhere. And this was probably like 9 months into multifamily. So I wasn't like I felt like, I got to have something in a year. I got to have something in 12 months. I was giving myself a 12-month timeline to have had some action, whether it was general partnership, a limited part, something. I had to do something in 12 months. And I happened to meet my partner, Daniel, and he's like, yeah, multifamily investor. I'm like, no, me too, or inspiring to be one. And he's been doing it since 2013, and we started meeting more often. And he was in the process of acquiring a property in Texas, and he brought me on the due diligence, and that's how we started partnering up from there. I raised capital for that deal and did the due diligence alongside with him. And from then on out, we formed a partnership, and we've been working. I'm very blessed to have Daniel as my partner. We work very well together. We balance each other out. What he likes to do, I don't like to do. What he's an expert at is not my thing. So we have opposite interests, kind of. He's more of a spreadsheet, Excel guru and guy, and I'm not so much into that. So we balance each other. We bring qualities to the table that, can grow our business. So yeah. So partnership was where for me, that was what has propelled. And I think it will propel anybody forward, is to find the right partner. And it doesn't, we're business partners. It doesn't have to be a business partner, but find someone to partner up with to do your first deal.
Yeah, I think that's an amazing insight, and one I really appreciate the story and how you two met, just being the only two in a room, right? Where that connection was there because you were the only two in multifamily. So it obviously sparked some opportunities for you guys to talk and kind of build on that connection and go from there. Fast forward, you now have done, 4 deals last year and built up, this portfolio of 1,400 plus units. I think that's really remarkable. For you starting out, so you guys have a conversation, you start figuring out what Daniel likes, what you like. Walk me through a little bit more and kind of the initial formation of that partnership. Did you sit down and just bang out an operating agreement, or did you talk about what you guys enjoyed doing? What were some of the things that you did to kind of feel out whether or not this was going to be a good fit?
Yes, and it's interesting you say that, because we never had the backstory of, or we never got together and said so should we form a part? It just naturally transpired into one. We met, when we first met, we had lunches often, because this is my full-time, deal is investing. So I have time during, the day to go out to lunch or coffee with him. So we met quite often. And then that's when we flew down to Texas and did the due diligence together. And that's when we spent a lot of time together and just talking about the next deal. And it just kind of evolved into a partnership where our roles and responsibilities naturally just kind of fit into its own self naturally. We didn't define each other's roles. However, we know what we're good at, and it just evolved on its own, really, for the most part. I mean, yeah, the operating agreement came about, and all, to officially become partners. But we felt like partners from day one. It just was a natural. It was kind of strange how it worked out, because I've never had a partner before either. This was like my first business partnership. And it is the most natural thing for us to be doing this together. So it's kind of crazy.
Yeah, that's amazing. I think too, like, to have it happen organically, right? Where you two could feel each other out, get to understand what you were looking for, what the other person brought to the table, and kind of mesh and build like that. I think that's a great way, right? Because sometimes, people get excited about a partnership, but they don't necessarily take the time to, just because they're not looking for the balance. And they like, well, this person's great and I like them, let's partner up. But if that person can't deliver the other side of what you really need, you have some challenges and some imbalance in that partnership.
Yeah.
So that's really great that you all were able to do that. For people, I'm sure people ask you too, but what are some key lessons, right, or some things that you would recommend to form a strong partnership with someone that you're looking to work with?
Well, with Daniel and I, we did a deal together first, as not as a business partner, but as GP partners. So it was a good experience to go through that first together. And then after that, we started forming. He was more of getting the deals and the underwriting, and I was more of the capital raising side. So we kind of knew we would be able to do a lot more together and kind of conquer. I mean, our goal, we both have similar goals of what we want and how we want our business to run. Eventually we want to be out and have the business run itself. Daniel wants to have, I think, 100,000 units.
That's a lot.
No, maybe more. Yeah. Like what? And I want a business that can support that. Like we're doing a business. It's not like deal by deal. It is, but we're also forming a business, and bringing more people onto our team, whether it's in-house or just third party. But yeah, we're growing, and we're wanting to. We meet often, and a lot of it is about how are we going to grow? How are we going to expand our business? Because it's a business. It's not property by property by property. We're a company.
And I think you hit on something really important there, right? It's just understanding the goals of that partner. Because if you were only looking for financial freedom, right? Like, hey, let me get to the point where I'm making X amount of dollars coming in each month, and he's trying to conquer the world, at some point you're going to be in balance and like, wait a minute, we're not aligned in what we're trying to accomplish.
I just want to put my feet up, on the sand right now. And it's not happening the direction we're heading. Right. If my goal is just financial freedom and not, enjoy the passive income. But no, we have a good, 10 years, solid years ahead of us to build. Like we're nose to the grind right now with what we want to accomplish. And we also know we need to step back a little bit on acquisitions, because we've been hammering out those. And we need to start working on our business as well to get it a solid foundation to keep acquiring properties.
When you say working on the business, what are some of the opportunities to improve the business as you see them right now? What are one or two of those priorities?
We're looking at hiring an asset manager now. We're doing all the asset management in-house. We're realizing we're spending a lot of time in our business. And if we could step back and have professionals take over, and we have third-party property managers. They're the professionals at that, even though we manage the property manager, they're managing the property. So having policies and procedures and systems in place when we acquire properties, it's systematized. everything's done. We know what needs to be done. We know the timeline. Raising capital is another focus that we're going to be spending our time on, so that when we do have a property, we're able to fund it quickly in-house. We still will bring on co-sponsors, but primarily to fund it in-house quickly, and then have the property run and everything, all the back end, the distributions, the property reports, everything systematized and run efficiently. That's working on our business.
Got it. So just making sure that really those processes are set up and the system is set up where it doesn't require you and Daniel to oversee every single aspect of it, but there's kind of a checklist and a system that's there where I won't say anyone, but ideally in a perfect world, you could have other people on the team go through and execute and not miss a beat. They would still be flawless and getting everything done on time, knowing what steps need to take place and moving forward. Yeah.
Right.
Yeah, that's something I think a lot of people should think about. I don't care how big your business is, right? The more you can systematize it, the more you can start to pull yourself back a little bit because you've laid out specifically what needs to happen and you can grow that way and you can scale because you can find other people to do it. It's tough if all the knowledge is in your head. If you've got all the knowledge of what to do and how it needs to get done and other people don't, then you're never going to be comfortable passing it on to someone else and they're never going to know how to do it. So you kind of have created this double-edged sword where you're stuck in the business because you haven't taken the time to really properly train people of what those steps are. So great insight there and great tips. And that's about business, right? I mean, to your point, that's not a multifamily syndication thing.
Exactly.
That's any business that, you kind of have to create systems, processes, and procedures and make it easy for people to figure out what steps they need to take to grow. I want to talk a little bit about some of the markets you play in, right? So I know that we've talked a little bit about some of the deals that you've done. Where exactly do you look for these deals and these opportunities?
Primarily, we are focused in the Mid-Atlantic area. We have properties currently in Georgia, 2 in Georgia and North Carolina, and 1 under contract in South Carolina. Of course, a few in Texas and Arizona, but primarily we're focused on the Mid-Atlantic. We do like the Mid-Atlantic area, and we do have strong broker relationships in this area. So we're fortunate with that. That's been developed over the years, and we almost all of our properties have been off-market acquisitions.
So talk to me a little bit more about the market. Why Georgia, North Carolina, South Carolina? Why those markets?
We like the returns that they provide for our investors, the markets. We focus on secondary and tertiary markets for the most part. It's 2 in Georgia that we have our tertiary markets, and they're doing exceptionally well. They're doing better than our expectations could imagine.
And when you say secondary, tertiary, give me some context, right? Because some people will say Atlanta is a secondary market, and some will say, I just assumed it's a primary. So,
it's a smaller market. Obviously Atlanta would be primary. Tertiary is like, what? I've never heard of that town. Where is that? It's lower population. So for example, one we have now is in Thomasville, Georgia. And people are like, what? Where's Thomasville, Georgia? It is a smaller market. That's why it's tertiary. But what we look for are the employment. We want to make sure that all of the tenants aren't primarily employed by one employer in the market, especially if it's tertiary. So if all the employees are one particular employee, then that is kind of a red flag in that. We kind of want it diversified through employment. We want to make sure that the population is increasing slightly, certainly not decreasing. Same with, vacancy, rent growth, all of the points that we need to hit to make sure it's a market that we even want to explore.
Yeah. So it sounds like there's 2 sides, right? There's the the market economics, right, with employment, job growth, population growth, those things, where you want to see growth and diversification, where no one employer is making up, an
Right.
overwhelming amount of jobs. But then also the multifamily metrics, right, looking at vacancy, rent growth, kind of the overall multifamily demand and the trends that will indicate that your business plan is viable if ultimately you can push rents, right? Because if people always
Yes.
look at population and employment, and I don't think they kind of take the next piece, which is the multifamily market trends, right? And you have to understand, are rents increasing? Or is there a lot of new construction that's taking place? What's happening with vacancies and all of those factors? And the good thing about some of these secondary and tertiary markets is you typically don't have as much new construction, new development that's taking place, where you are starting to get concerned on, it's called absorption rate, but the amount of new units that are available versus the amount of people, the new people who want to live in those new units, right? So looking at that net absorption rate and making sure that, there is enough properties for the amount of people who want to live in an area or who are moving to an area. So thank you for shedding some more light on those pieces there. So you mentioned the secondary and tertiary markets give better returns, right? In some
Well,
regard, oh, go ahead.
well, not necessarily. Not it's. I mean, not it can't. Primary market can be great too. I mean, Atlanta could be a good market. It depends on where the property is.
Yeah.
But we have found, I wouldn't say luck, but we have found great opportunities and returns in smaller markets.
What are some of the drawbacks there? What concerns would you or other investors have about investing in smaller markets?
Concerns with smaller markets, I guess, would be it could be vacancy, or it could be, maybe some of the employers moving out of the area. If that would be a concern, we would, in our underwriting, have a higher vacancy. All of our properties, obviously, before we buy them, we stress test the underwriting. So what's the highest vacancy we can go to break even? What's the highest sale cap rate we can go to break? So we test that no matter what market we're in. Those are things. So especially for in a tertiary market, those are really important factors to, make sure that they're done when buying a property, that those are all tested and stress tested. And what's your break even point? What's your break even income on this property before going forward? And if it's too close, and as a major employer packs up and moves out, that could really affect the property.
Yeah, makes sense, especially in these smaller tertiary markets, because you don't have as many employers ready to swoop in right away. To your point, on a market like Atlanta or a major metro, you're probably diversified by industries. So even if one were to leave, you probably have one or two more that are moving in. So maybe not as much of a concern. So really great tips for our listeners to understand what kind of things to pay attention to as you are selecting markets. Kristine, I know you talked about kind of your major role in the partnership is a combination of due diligence and really, leveraging kind of your flipping experience and going in, understanding the construction side, as well as raising capital, right? Connecting with investors, bringing that capital to the deal. I know you guys have raised a lot of money for a lot of deals recently. Can you just give maybe a glimpse of maybe some of your best practices when it comes to talking to investors, some of the concerns that investors bring up, and kind of how you handle the concerns or talk to, the challenges or issues that some of them may have?
Mm-hmm. That's a great question. And a lot of investors, I guess their concern is, it depends on the property, who's going to move in to the property once it's renovated. If it's renovated, will the rent bump support the economy that it's in? It depends on how sophisticated the investor is as well, as far as what questions we get. I would say the bulk of the questions we get is on the market versus the property itself. It's interesting to me that it versus the underwriting on the property versus the CapEx repair plan we have, the most of the investors' questions are on the market. And there are deals that we have that we share with our investors, and they don't even look at the deal. They're like, oh, I'm not comfortable with that market. And they won't look at it. Some people are set on certain markets for reasons. What's known to them is and so it's like the one we have in Georgia, in Thomasville. Some people are like, no, too small of a market for me. Thank you. Although the property is doing, great, but it wasn't for that person. So I would say the primary questions that we have in speaking to investors and in doing webinars as a bulk and answering investor questions, is the market.
It's interesting to hear you say that, because it's we get that as well, because I mean we're in the Midwest. We do deals in Cincinnati and the Cincinnati MSA, and I will hear people say, "Hey, I'm interested in Columbus, but not so much, Cincinnati or Dayton, or they're interested in Indianapolis, but maybe not these other markets." And the thing that I try, and obviously the show is called Target Market Insights, right? So we do talk a lot about markets, and the thing that most people don't understand is the market that's an MSA level thing, first of all, right? We're talking about a major metro with, 1 million people, 3 million people, 9 million people in it. So there are certainly external factors that can have an impact. But this is really about the sub-market, right? This is really about the neighborhood level. And in any metro market, there are sub-markets that are very desirable, that are seeing growth, that are attracting new jobs and residents. And there are probably areas that are in decline, that are seeing people leave those areas, that are seeing the school districts, soften or worsen. And there just doesn't seem to be as much focus on what's happening, where the property is actually going to be at, and to your point, who are you actually going to attract to the property? And people just say, oh, I'm going to pick on Dallas, since that seems to be the number one. Oh, it's in Dallas, must be great. And it's like, you don't even know the submarkets it's in, but you could do a deal in Dallas and people probably won't even look at anything else because it's in Dallas. But, you go to some of these other markets and you literally have to show like every single data point and stat so people understand that, hey, this is actually in a phenomenal location that's seeing great investment and great growth. Tell me a little bit more about kind of that experience you're facing there.
Yeah, and that's one of the things we probably spend most of our time on the webinar, explaining the deal, is the market, the job growth of it. And some people say, well, I don't even know that market, so I'm out. I'm like, well, we didn't know the market either on a granular level before we went under contract with the property. Investors also need to have a little bit of trust in who they're investing with too, and knowing that whoever they're investing with, the operator that they're investing with, has done their market research and due diligence on the market. Let me pick another property that we have. I know I keep going back to Thomasville just because it's such an out of the standard market. But no, we didn't know anything about Thomasville before who knows Thomasville, Georgia? Yes, it's north of Tallahassee, but nobody knows like the exact Thomasville market. So when people say, you target markets, that's great. Another property we have is in Warner Robins, Georgia. Most people don't think I'm going to reach Warner Robins, Georgia and really know that market. So, and then when a property comes on, I know I will know the market. So yes, I guess you can say it's a suburb of Atlanta, but not really because it's so far out from Atlanta. But so we get on a granular level when we buy a property in a market. There's no way we're going to put a property under contract or submit an LOI unless we really dive deep and do our diligence on that market. So markets can be broad, but when we buy a property, it is microscopic looked at. What side of the river is the property on, or the tracks, or even, that all plays into factor. So when someone says, oh, that's Atlanta, great. Well, where in Atlanta is the property? Because it could be in not so good of an area, right? So people might hear, oh, Atlanta, definitely I'm in or I'm out, but it's really the property and the operator too that the investor needs to trust or look at the market, themselves too, to believe that it's a good market.
Yeah, great points there. Kristine, just from your experience working with investors, and for someone who's listening to this, who's looking to maybe raise money for a deal for the first time, can you share maybe a key lesson or two that you've learned in your experience that maybe you learned from doing some of your earlier raises or even some of the deals you're doing now that, you wish you knew then and that a listener can kind of put in their pocket and maybe not make the same mistakes?
Every deal. We're on our, sixth deal right now, something like that, since we've been partners. And every deal, I learn something and grow on, or, there's all twists and turns that something changes. I would say, if someone's wanting to raise capital, I would say really, really, really know the deal. And then that gives that person confidence in being able to talk to investors and raising the money. And also raising money starts before you have a deal. Remember, I didn't even meet Daniel until 9 months or so into multifamily. And during those 9 months, I'm like, I got to get back in the game. I got to start going to meetups and networking and all that and meeting people and talking about multifamily. So I would say don't wait. Just start talking about multifamily, put yourself out there. And when you talk about investing in multifamily, truly come from your heart and believe you're not taking people's money. Like some people I need to, get money. You're offering people an opportunity of a lifetime to invest in multifamily that they couldn't otherwise get just randomly. They have to know an operator to invest. So you're really providing a service for someone and making their money work for them.
I love that last point. I mean, spot on. And it's something we share with everyone. It's one of the things we learned as well. I think it's very easy to focus on what you gain and what you need, but it's not about you. It's about them. And if you focus on the opportunity that you're creating and servicing these people and giving them an opportunity to, make more money outside of the stock market, which is going crazy, to diversify their portfolio, to gain some of the tax benefits that come from investing in apartment syndications. If you focus on what they gain, it becomes a lot easier. You put a lot of unnecessary pressure on yourself when you focus on, I need to raise $1 million or I need to raise $500,000 versus just talking to people and educating them about what you do and the opportunities that present themselves for investors in a deal. So really love that point. It's something that we echo to a lot of the people that we work with as well. And I think you hit the nail right on the head. With that said, we're going to transition to our bullseye round. You ready?
Okay. Bring it.
Give me a failure or an apparent failure that sets you up for later success.
My last, that one's an easy one for me. That was my tear down rebuild. That was a monster. Yeah. And it set me up. It pushed me to multifamily.
Was that a financial failure or just a time suck? Okay.
Both. Yeah. Yep.
Well, that's never
fun. It was a failure, but I learned from it. So, I guess you consider it only a failure if you don't learn from your.
There you go.
Yeah.
All right.
I have to look at it that way.
Give me a book you've recommended or gifted the most in the last year.
Oh, I have it sitting on my desk. E-Myth Revisited. Looking at, because I have 2 copies and I need to give one to someone. But it's about business. It's not about multifamily. That most of the books I read are about business or thinking, your conscious, subconscious, but goal setting. Those are the books I read primarily more than multifamily.
Give me a digital or mobile resource you recommend for your business.
IDR. I'm going to plug IDR because that's who we use. And it's Investor Deal Room, and they're an online portal for our investors. And we could not be doing the raises we're doing without it.
All right. Give me a daily habit that helps you stay focused on your goals.
I get up at the same time every day, and I have my routine of getting my kids, my morning routine. I can go into what it is, but That's
Give me a little bit more.
Okay. I get up and make my kids lunches, walk my dogs. I read every morning and I go to the gym. And then I prioritize my day, my top things that I cannot go to bed unless I get them done.
All right. What's one thing you know now that you wish you knew when you were starting out?
One, I wish I started when I was 23. I do. Our operations assistant is 23 that we recently brought on. I probably that I could have done apartments sooner. I didn't need to have a life lesson. Like I could have done. I didn't have the confidence, which comes with education, which comes from doing it. I was scared to just do it, and I would have done it sooner.
What advice would you give to a smart, driven college student about the real world?
Well, that's good, because we also had a college student part of our team. As part of our team, that he went full time into pilot training with the Air Force. So he was our underwriter for about a year. It's hard work. You get out of it what you put into it. Stay true to yourself and find what you like to do.
What are you curious about right now?
Curious about business. I love business, so I'm always curious about anything business related.
All right, I know you said you were in Northern Virginia, so give me the best place to grab a bite in your area.
I'm in Fairfax area. I will say I'm going to do a plug in DC because that's where I just had lunch recently, and it was Teddy and oh my gosh, what was the name of it? Teddy and the Bully.
Yeah.
I don't know. It was in DC because we had a meeting in Georgetown, and that was like top-notch restaurant.
Teddy and the Bully Bar?
Oh my gosh, how did you know that? Yes.
Yeah, that was the spot Maurice, who was
that's right.
on the show. That's his spot.
So I gotta recommend that place. Teddy.
There you go.
Yeah.
All right. Excellent. We'll definitely make sure we link to that as well. And I'm sure Maurice will be happy to have you call that out. Excellent. So we covered quite a lot on this episode. We've talked about partnerships. We've talked about, the things you look for in secondary and tertiary markets. We've also talked about, raising capital and some of the things that you've learned along your pathway. For our listeners who want to learn a little bit more about you and Mission Bay, what is the best way to get in touch?
The best way to get in touch with me is just go to our website, Mission Bay CP, as in Capital Partners. So it's missionbaycp.com. There you'll find a link to get in touch with me through LinkedIn or Facebook. But all of our contact information is on our website.
Awesome, Kristine. Really good talking to you and catching up since it's been a little bit since we spoke last. And very excited for the growth that you all have seen and continued success to you. We hope to see you again soon, and take care. Thank you for coming on Target Market Insights.
I appreciate you, John. Thank you so much.